tower. You are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody. Good morning and welcome back to another live stream. Happy Friday to you. Hope everyone is doing well and hanging out okay in this crazy, crazy market. We are just kicking off the stream here. Let me just make sure everything is good and running clean on my side here. Just make sure my mic is all good. Yep, looks okay. All right. So let's jump right into it. So yesterday we had the NFP report, which ultimately caused some real interesting moves to take place in the markets. Overnight, we had another crash in Bitcoin prices. I mean, just take a look at, or crypto prices, I should say. Bitcoin specifically, though, dropping well below where it found or where it kind of laid to rest yesterday. And I made a post on my Twitter. And look, this is going to either make me look like an idiot in about an hour or a hero. And to be honest, look, I throw it out there. That's one thing. If you like my content, if you don't like me, if you like me, whatever. But I will always kind of just throw out my opinions because that's what I do. I made this post. Again, it'll either age like milk or it'll age like wine. We'll see. But I said that today's flush lower in risk assets, specifically Bitcoin, looks like a possible capitulation move. In my opinion, I think a possible bottom is forming in crypto and stocks. Overnight, we had a huge flush, almost like a pseudo flash crash in the crypto market. And the crypto market has been the culprit to all of this. Like all of this selling started in crypto. And it's still going in crypto, but I wanted to point this out because I thought this was kind of interesting. Overnight, you had a capitulation move, right? So the New York session yesterday bled into Asian session. Asian session, we saw another flush to the downside, right? And so I actually think that the flush that we saw overnight could potentially have been, at least for the short term, a little bit of a bottom forming. Because I think we have a lot of leverage in the system that is currently being worked off. Now, it's very painful for the people who are leveraged because they're the ones who are getting quote unquote worked off from these types of moves. But I mentioned that I think that though these rapid sell-offs, which is what we're in a really rapid sell-off, especially in the crypto market specifically, though these rapid sell-offs can be brutal, with high levels of margin and leverage in the financial markets, these types of moves are also healthy to reset the room a bit. That's my opinion on this. This is not a fun time for people who have been leveraged. I mean, if you are somebody who has been buying a bunch of quantum stocks, cryptocurrencies, altcoins, I'm not here to poke fun at you because the market's already an incredibly painful place for you. I totally get it. We've all, if you've been around trading for a while, this is how you learn. It sucks. It hurts, right? People who are, out on the risk curve, as they say, buying the really risky stuff. These are the moments that hurt, right? And this is where, number one, you learn things or you quit. That there's we are coming up on an exit ramp right now on the highway of trading and investing in financial markets. A lot of people are going to take that exit ramp because moves like this make people quit. People give up. It's understandable. Trading is really, really hard. And if your whole portfolio is in, Solana and Ethereum and uranium stocks, and it's in quantum stocks, and it's in AI stuff, a move like this is no fun. But I'm not trying to scare anyone, but this is also not out of the usual and very possible it could get worse before it gets better. So here's my take on it. Because one of my biggest pet peeves is when trading content creators never actually say what they're going to do themselves. They just kind of talk both directions. Like they say, oh, it could go up, it could go down. So I bought the dip. I am long the NASDAQ. I bought some stocks that I like yesterday, but let me be clear. My opinion is I think it could go up, but I could also be wrong. And if I'm wrong, that's where the next part comes from, or the next part of the conversation is critical. If I am wrong, then am I going to get destroyed? Well, some people, that's how they're taking this market. Some people are looking at this and they are like, they aren't thinking about, what if I'm wrong on this? What if the market is going into a 15%, 20%, 25% pullback? What if that happens? You have to ask those questions or you will not survive in trading and investing. It's not going to happen. Now, if you're a investor, right, you say, okay, well, I hold and I wait. But if you're going to hold and wait, are you in stuff that will survive? Because it's not as easy to just chalk it up and say, oh, I'll just wait to come back. Well, if you're buying quantum stocks, they might not come back. They could go to zero. If you're buying high risk stuff, if you're buying altcoins, they could go down 90% and never come back. Ask yourself, what am I going to do if and then certain things happen? So I think that this move is a sentiment-driven deleveraging event. So having an edge equals not being right all the time. Exactly. You can make a incredible amount of wealth with a 60%. I mean, if you have a 60% win rate on a one-to-one risk reward, I know that sounds easy to a beginner, but to a pro, that sounds really hard. Okay. 60% win rate with a one-to-one risk reward, you would be phenomenally wealthy, but you're still going to lose 40% of the time, right? It's not about being right all the time. That is overrated as anything in trading. What is underrated in trading is actually finding an edge and employing it over thousands of trades, not one. Why do you hate quantum? Oh, I don't. I don't. I typically, my risk tolerance is not incredibly high. Not to say I think that you can't potentially buy those sorts of things if you liked them. But I don't know enough about it. And I think that I like companies that make money. I don't like super speculative stuff. And if I do touch that stuff, it's usually for trades, not for like holding longer periods of times. Like I'll trade a Palantir, but I don't love the idea of like buying and holding forever Palantir. Like in fact, Palantir, just out of curiosity, what's that doing today? I had a level marked up around 152. If you get a little bit more downside there, I may actually take that as a trading opportunity. Because I think that if you're going to get a bounce on these things, you know, your gains on a Palantir, or to be fair, a quantum type name, I just think to me that's like too much sort of built-in leverage just in the name. It moves so much. But you have to understand volatility is different between different assets. If you trade gold, if you trade NASDAQ, et cetera, it's very different. So anyways, I bought the NASDAQ. I have a stop loss below this market structure point here. I'm going to see where this one goes. But, you know, ultimately, what I'm looking for is this October 10th level of support to hold. If it holds, great. If we can get constructive, we can start kind of bottoming out here. I'll look to manage that trade. If I'm wrong about this and we flush lower, then I'm out. I have no leverage. I'm not margined in any way on my account. And I love it that way. When the market's going straight up, I'm like, dang, I wish I had more leverage on this stuff. When the market's going straight down, I am reminded why I don't trade with high risk or high leverage. I also bought gold yesterday. So I have a very small position on gold. I mean, it's not a very small necessary absolute position, but on the account, it is a relatively small position on gold. I bought gold holding the 20-day moving average. I think that the overall upward trend is still intact. Yesterday, I was getting a reading on Edge Finder. Let's see if we still do. We may not. Yeah, gold's kind of jumped all the way down to neutral here. But I still like the overall momentum of gold. I also find that, its relative strength right now is attractive, I think. You have risk assets completely falling apart, and here's gold actually holding a support level. So I think you could get some upside in gold. It's a small position for me. I'm looking for a move back to these highs and potentially beyond in order to potentially trail stops and kind of let that thing run. If it can. If it stops me out, I'm out. Let's see. You've got some nice moves here happening in the Russell. Russell, price action wise, still struggling here. I mean, if we get our fibs out on the Russell 2000 index, it is just shy of the 618% retracement. Actually, it did tag it yesterday. So we'll see if that can hold support. You have Dow Jones lost its 618% retracement, although it is kind of testing this area here. Although I like this level even more. So if we get a little bit more pullback on the Dow, that might be an area where I could potentially look to take a trade on that one. Let's see what else we have. Dollar index still floating just above 100, sitting there as resistance. Not too interested one way or the other on the dollar. I think given that the Fed is not going to get much more data from here between now and the Fed meeting, I actually think that's part of the trigger to why risk assets sold off here recently. I think that the idea that the Fed doesn't have more to go off of, it pretty much says like, okay, we're not going to get some big swing likely that's going to drag in a rate cut in December. And so I think the dollar's kind of holding steady off of that. And I think that same kind of theory is also putting pressure on risk assets, because people who are hoping for a rate cut, hoping for the Fed to kind of reiterate dovishness, are likely to not get that. They're likely to see the Fed just kind of stay put because they don't have more data coming in, right? What's up, Blint? Good to see you in the chat. Health sector doing well. I'm in a nice profit on Biogen. Biogen is, I've traded Biogen a couple times here recently. Look at that stock, man. That stock's killing it. Healthcare stocks, XLV has been doing really well. And I like to look at when the markets are down, what is up, right? So what people are, or where we're seeing strength in a down market is sometimes I like to trade that kind of direction. So yeah, healthcare stocks look really strong. I'm just going to take a look at Stockbox really quick in terms of healthcare names. Biogen, I know, has been a really strong one recently on the, there it is, BIIB. And if we just select for, let's go just healthcare stocks for a second. Yeah, so you have Intuitive Surgical, Regeneron, Merck, Biogen, Bristol Myers also might be interesting. Although I think from a charting perspective, BIIB looks really strong. So nice play on that. Good to see you, Alan, in the chat. Good morning. Yeah, we have someone spamming in the chat. I think it's gone, but we'll keep an eye out on it. Let's see, what else do we have to look at? So, okay, I did want to take a look really quick at some market sentiment. Put call ratio after yesterday. I'm surprised it didn't spike more. I bet you, though, Bitcoin's, look at this. Look at this, guys. And this is the rotten part of the market right now. It's the crypto world. Not to say I think that crypto is rotten per se, but this is what's causing the issue. Is the deleveraging that's taking place, I think, in the crypto crowd. I said that at the top of the stream. I still think that is the case. This problem in markets, the technicals, the mechanics of this market sell-off seem to be rooted in the crypto sell-off. And so I think that you're not likely to see the market really round out until crypto caps out. However, check this out. We have bearish sentiment reaching some extreme levels on Bitcoin. This is using the IBIT options flow, which is a Bitcoin ETF options flow. So put demand very, very high for crypto options contracts, I think that's really interesting. I took that buy on BIIB2, thanks to the Stockbox free trial a couple weeks ago. Awesome. Yeah, Stockbox, I've been using it a lot here recently, especially when markets go on sale. I whip open the Stockbox a lot. I've been looking at it quite a bit here recently. So I am also looking at some stocks that I like. I added a few yesterday. And if this market keeps rolling over, you got to look at things positively. The positive is that if the market rolls over, does it mean I'm going to stay in some losing trades with my NAS long? Sure. But big picture, when the markets are down, it doesn't feel nice, but that's when I start to look at shopping for stocks that I like, right? I don't like to buy and hold stocks when they're at the all-time highs. I like to buy stocks when they're low. And I still think you have room for, in terms of like companies going on sale, I still think we have a good bit of a ways to go. But there are some stock trades that I'm looking to do. I own Amazon. I added a little bit of Amazon here recently. So, I bought PG, very boring stock, but I bought Procter & Gamble, looked good on Edge or Stockbox here. So, I'm being constructive. If this market does want to keep rolling over, you got to roll with the punches. If we're going to see this market kind of continue to fade lower, the positive in that is that if you're a investor, if you're somebody who is not leveraged, who is patient, let it come to you, and you might be able to get some good stocks on sale or good crypto if you like that kind of thing. I'm not a big crypto investor. To me, it's like I just love good companies that go on sale, that make profits. I get that. I understand that. That's what's comfortable to me. To each their own. Not to say something bad about crypto per se. I just think it's, to each their own. In terms of trades, I think that this is part of the reason I think that we're nearing a bottom on this move, though, is you have Bitcoin put call ratio going crazy. Let's take a look at NASDAQ. NASDAQ's still kind of in neutral territory, which is surprising to me. A lot of mixed sentiment there. Russell, though, look at this, guys. Put demand on the Russell going wild. So a lot of surge. I mean, that's a big surge. Bearish sentiment got very, very loud yesterday. Let's see. Nikkei. That chart's a little wonky due to that one data point. Chinese stocks, interestingly, getting some bullish sentiment coming in the Chinese stock market. Let's go look at Dow. Dow Jones, still a little bit. This is where I think, like, if you're watching the Dow, if you get another flush lower and this put call ratio goes a little bit more extreme, I like it. But currently, I think you're a little overstretched to the downside. Again, I think the big player in that is Bitcoin, right? Bitcoin continues to sort of be that the source of this recent drama. The crypto crowd, if we just take a look at Bitcoin, the difficulty I see here from a technical perspective is that our next obvious major level of support is on the weekly time frame here, down around 75 to 78,000. Could we have that happen over the weekend? Very possible. I think that, even on a long-term weekly time frame chart, we've lost this trend line. We've lost the 50-week moving average. We are now in contact here with the 100-week moving average. So if bulls are going to take it, right? If bulls are going to give us a try here to the upside, it's got to be somewhere, in my personal opinion, it'd be somewhere between where we currently sit and this 75,000 mark. I know it's a big range, but I'm talking about kind of a longer term chart here. If the crypto crowd's going to hold on, we probably need to see a bottom sooner rather than later, because if you break that level there, 75K, I mean, 65, 60,000. I mean, you're talking about Armageddon for crypto world. That's no fun for crypto land. 60,000 is taking you back to levels not seen since February of last year, and going back further than that, February of 2021, right? Or what is that? March of 2021. And And that's the thing about crypto, right? Like it's the cost to play the game with crypto is very high risk, very high reward. If you're right with crypto, you can make a ton of money. If you're wrong with crypto, you can lose a ton of money. That is the game of crypto. FedWatch shows 75% chance of ease in December now, was 40s yesterday. Wow, what changed? Let me take a look. FedWatch tool, just going to pull this up really quick. Wow, what's that about? Very interesting. I wonder if interesting. Nick, is the Edge Finder still on offer? Hey, Melissa, yes, it is. We'll drop a link here in the chat if you want to grab access to Edge Finder. It is currently still, we're doing our Black Friday sale this week and next. If you do not have a copy of Edge Finder, we'll drop a link here in the chat. It is currently 45% off if you message in while we are live streaming. So simply click this link here or scan the QR code if it's easier, whatever's easier for you. Scan the QR code or click that link. It's also findable in the description if that's easier. And that will connect you when you click that. It'll connect you to a real person on my team who can get you some information about the Edge Finder VIP stock box 45% off discount. If you've ever wanted our products, grab them today because they are the lowest price we're doing all year. 45% off. Yeah, very noticeable shift. That's a huge Fed Williams dovish comments. Okay, so if there's a Fed commentary, let me break this down a little bit. The Fed is pretty mixed, right? Some say we should cut, some say we should not cut, hold. But there's a voting committee, right? And so if people sway, if their votes become more clear that it's this way, even if it's just one or two of them start to sound more dovish, that's where that volatility in rates comes from, right? Because I heard it talked about on CNBC. I was listening to somebody talk about this, and he was explaining that Powell, as of like a week ago, just doesn't have the votes to cut rates. But if voting Fed committee members start to sway towards a rate cut is plausible, it can swing wildly. Even one person's comments, even not Jerome Powell, but like even one of the Fed voting committee members could swing it dramatically. So if we do get a rate cut, look, I've said it and I'll continue to say it. I don't think that December rate cuts are make it or break it for this market. I don't think that the actual economy is problematic. I think you're working off some of the froth, some of the leverage. I've mentioned this many times, and this is why I'm buying the dip. Let me explain. What do we do on this channel all the time? We look at our three prongs. Technical analysis on the NASDAQ and S&P 500. Long-term trend is still intact, right? Apply your moving average on the S&P 500. We're testing the 100-day moving average. We're testing a major area of support. Technicals get a check mark for me for now. Now, again, when I outline these ideas, there's no certainty in markets. Nobody knows for sure what the market's going to do next. It could dump in the next 3 hours. Maybe it will. If it does, how are you going to handle it? You have to know what you're going to do. We talk about that all the time. But technicals get a check mark because, again, 100-day moving average, key level support, longer term upward trend. I think we're still fine here. Technicals look okay. Sentiment is in the absolute dumpster. Check. That's a good thing. Why? I like to buy dips where people are scared because there's a lot of it out there. There's a lot of fear in this market right now. And I again, all three of these things aligned is what I look for. Fundamentals, I don't think have really drastically changed here. We still have some decent economic data. Jobs report was not that bad, right? So people worried about, oh, the economy's falling apart. The jobs report wasn't that bad. Sure, you got an uptick in unemployment rate, but nothing mission critical. So putting my logical thinking cap on, fundamentals look okay. Inflation is at bay. The Fed's still generally going to cut rates, I think, right? I think the next path for the Fed is to cut rates. Corporate earnings are strong. Sentiment is very weak. That's what's driving prices lower. People are scared and they're selling. In the short run, that can cause the market to tank. But I like when we have sentiment freaking out. It creates a nice risk to reward scenario. I think this is a sentiment sell-off. I don't think this is a fundamental sell-off. And so I am buying the dip. Now let me add some qualifiers here. No leverage. Stop losses. That's the caveat. That's the key aspect to this. Most people, where they will go wrong is they will say, okay, I like, that makes sense. Those look good. I'm all in. And they'll just dump every penny they have into call options, or they will buy cryptocurrency with their whole portfolio. They'll full port, right? That's not what I'm doing at all. The reason I've been trading for 10 years almost. The only way I survived all this time is risk management. I'm not using leverage. I'm using an appropriate size to my account. I know what my risk is on every trade. I have stop losses in place to control downside risk. You cannot, no matter how strongly you think, like I think the market's going to rebound, but I don't know it. And I could be wrong. Okay? Please do yourself a big favor. Don't trust anyone blindly on the internet, because no one on the internet, not me, not Warren Buffett, not Michael Burry, no one knows what the market is going to do with certainty today or tomorrow or the next week or the next month. Nobody knows. You will be the greater fool if you believe too hard in someone on the internet that claims they know where the market's going to go. Now, again, educated guesses, that's what we're all about on this channel. Educated guesses, risk management, that's it. You don't know if this trade or the next trade is going to be a winner. And anyone who says otherwise is lying to you, trying to sell you nonsense. Okay? Smart traders recognize what edge really means in markets. Building logical trade plans does not mean winner every single time. That is a fool's derivation of what to do in markets, okay? Don't be that fool. Risk small. Survive. People who are going to blow up are on offense. People who are going to survive and move on and keep trading and keep investing are going to play defense in a time like this. Now I'm buying the dip, but I'm not doing so with leverage. That's the critical component. Let's watch Bitcoin. I think if you want to see a sustained bottom in this market, I've said it for a while, I still feel this way. I think you want to see where the disease, where the problem is, needs to show some signs of life. If you can get this kind of move, if you can get a break in crypto to the upside, that would be an incredibly good sigh of relief. What that would signal to me is that, okay, the people who were super margin, super leveraged, they're getting, that is done, right? The deleveraging event likely is done, in my personal opinion, if you actually get a solid breakout. The problem is every time we're getting a little bit of a bump, sellers are coming back in, right? Sellers are taking that as an opportunity to liquidate. We need to see that liquidation pattern stop. To put it really simple, we need a higher high, higher low sequence. That's it. That's what I'm looking for, okay? Nick, start your own prop firm. It's a profitable business. I know, but I don't want to start a prop firm. I don't find that it's not my passion. I like building tools for traders. I like building tools for myself. I like trading myself, and I would rather trade the money that I have than hand it out to strangers on the internet. Not to say that there aren't, but again, I've been trading for 10 years. I am a profitable trader. I've worked my butt off to get there. I don't want to hand my money out. That doesn't mean that prop firms are all bad. There are great prop firms out there who are not great traders themselves, who have said, you know what, I'm a good businessman. I'm going to fund the good traders in the room and build a business around that. But that's not me. I'm a profitable trader. I have no interest in handing out the capital that I have to people on the internet. And I understand that's not exactly how it works, since they're all using, demo accounts anyways, and it's more of a casino-esque type of model. Whether you like that or not, that's the reality of the prop firm industry. It's sort of a casino that favors a very small minority of people who trade with them and who are actually good traders, and does not favor the vast majority of traders who trade in prop firms. Again, that's the reality. I think that's what most people understand about it. Most people understand that's just trading in general. Most people lose. The prop firm industry makes money off of losing traders. And by the way, winning traders make money off of losing traders. That's how this game is played. It's brutal. It's the reality of the markets. I did mention yesterday, I added a little bit to my Amazon shares. I added, or I bought for the first time in a while, guys, I bought Meta. And I was really, this is not a short-term trade. I'll clarify. Meta's trading somewhere in the 19 to 19.5 forward PE ratio. Revenue growth in the mid 20s. Earnings growth looks skewed because there was a little bit of a really weird accounting thing that happened on their previous earnings report. So disregard this because that's not accurate. They actually beat their earnings growth, removing the accounting thing that happened. Long story short, I still think that Meta on a dip like we're getting, I think it's a good buy, personally, not financial advice. On a weekly time frame, we have a nice moving average. We're tagging into the 100 weekly moving average. Big picture, I really like this company. So I'm buying the dip. If we get further downside, I welcome it. It's not going to be fun short term, but long term, I think that would give you some opportunities to buy some stocks that you like at lower prices, or crypto if you're into that stuff. But yeah, I mean, in the short term, it's painful out there, right? This is trading 101 is survival and, educated guesswork, risk management. That is those two things are critical in times like this. If you are not risking properly, this market is going to take from you. It's going to hurt. Okay. Manage your risk. Be careful out there. Probabilities for rate cuts went up. I think that's also a bullish thing, although I wouldn't overvalue. Do we cut? Do we not cut? I don't know that is really mission critical for this market. I think as long as we generally have the Fed still wanting to cut interest rates in 2026, I think that's a tailwind for risk assets. And again, I think that the sentiment in this market is a little bit overdone. U.S. stock market just opened up. I'm going to throw the stream over here in just a second to Marco, who's going to take over. I am long the NAS. I've got this area of support here. Stop below. Look, I've reiterated over and over on this stream. People are really, my comment section yesterday and all over social media, I'm sure you guys saw this too. It was a war zone yesterday. People were getting liquidated. It was ugly out there. People are not nice when they're getting liquidated. Please be careful. Trade safe, trade smart, trade small, and get the edge finder, man. If you want to buy a dip that is guaranteed to be a good buy in terms of, its price, get the edge finder. It's 45% off. Here's what the edge finder chart looks right now, okay? Edge finder's going straight up, and it just gave you this huge dip buying opportunity with a guaranteed increase in price in 2026. If you've ever thought about getting the edge finder, if you've been like, man, the tools, Stockbox, edge finder, those things look awesome, that would really help me in my analysis, then I can give you a little bit of a preview. It will help you in your analysis. Edge Finder is an incredible tool for sourcing a bunch of stuff. We just added a volatility heat map, a momentum heat map for moving average confluences. We added our new AI news summary feed where you can look up whatever asset you want and get an idea of why it's moving up or down each day. a little bit more of a fundamental analysis without the bias of headlines. If that sounds interesting to you, again, it comes with your Edge Finder, of course. We also have seasonality in play. So if you want to look at historical patterns for assets throughout the year, you can pull it up there. And of course, the most popular feature is the top setups simple view, or top setups in general, which shows you a huge collection of all of our data and what it is signaling: bullish, bearish, very bullish, very bearish, neutral, for all of our favorite charts. Whether you trade NASDAQ, the yen pairs, the dollar, gold, silver, oil, whatever you trade, we have it in the Edge Finder. We have a ton of things in here, and it's showing you what our system is finding in terms of economic data, sentiment data, and technical data, what it's suggesting for each one of these. If you don't have Edge Finder, like I said, Black Friday is here, 45% off. Click the link that's been dropped in the live stream chat, or scan the QR code that is below my camera here to be connected to a real person on my team who can set you up with the Edge Finder, or the stock box if you don't have that. If you need these and you cannot quite afford the price at this time, we are also offering to split up the cost of the tool into 2 monthly payments to make it easier for people who need that option. Simply send us a message, let us know, and our team can make it possible for you. Don't miss the chance. It's the best price all year. Buy the freaking dip. All right, coming up next, Marco. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. I hope everyone is doing well on this sort of a, I would say, Red Friday or Red Thursday, Green Friday. The main story everyone is watching is, of course, the tech stock market, the NASDAQ, NVIDIA. So NVIDIA had quite interesting price action, beat the earnings, value went higher, and then yesterday we crashed with a lot of force, and now we are continuing the crash. Why is this happening? What is the narrative? What is leading this sell-off? Well, I believe it's 2 things mostly. First thing, if you have been watching my analysis of the stock market, and if you have participated on the webinar this Monday, you would know that I personally believe the AI story is getting a bit stale. So I'm not calling for a full-on crash. I'm calling for a pullback of maybe 10-15% from the all-time highs. Right now, we are standing at minus 8%, with the bottom being at minus 9.3. Of course, a key level that I'm watching is the 200 EMA. So 200 EMA, which is down there, that is what I'm closely watching. And also, if we get 15% pullback, that's still okay. Some support levels that I have in mind is, of course, this 2400 and 2300. So 2400, 2300. I think those levels of support are pretty significant. Looks like 2400 is holding for now. And the second reason for this happening was that yesterday we got the NFP print. NFP print came out mixed, I would say. These numbers, so the actual number came out twice, let's say, better than expected. So 2 times bigger or higher. But the revisions for the previous month came in lower by 18K. And the unemployment rate went up from 4.3% to 4.4%. So even though we got a great NFP, we still messed up on the unemployment rate, and the revisions came out pretty bearish for the August print. Okay. Why is that important? That is really important because the Fed is planning to cut rates, but we are not sure if they will actually cut rates in December. What is the percentage now? Let's take a look. So now it is, actually it is 73.1% chance of rate cuts in December. So this thing is flying from 90 to 20 to 30, now to 70. It's all over the place. I personally still believe the Fed is going to be more hawkish than people expect. The DXY is loving this, let's say, hawkish Fed for now, and also looks like DXY is up even after the NFP print. And I actually think the NFP print was more healthy than people expected. I think most people expected there's going to be a lower number than the forecast, and that it's going to be something that basically guarantees rate cuts in December. That actually didn't happen. So we got mixed results, but I would say more healthy, more on the healthy side. That is why possibly the DXY is flying higher. Do we have something in the news? Let's check financial juice quickly. So let me see the market moving news. Okay, so inflation progress has stalled, but should be back on track to 2% in 2027. So when did this print? 13:30 today. Interesting. And we do have some news in 5 minutes. So we're going to take a look at the news. But anyways, yeah, if you guys don't have financial juice, it's free, and you should definitely have this website open at least once per day to check out what is happening. I usually filter for market moving, and I filter for Forex, and I look at the news in red. So the news highlighted in red like this. Okay. As far as my positions go, I got taken out on silver. I'm now out of this position. I did take 50% off at the all-time high, or near the all-time high. I let the rest run. Unfortunately, I got taken out, and the net profits on this position is plus 0.6 R, let's say, or 0.6% if you would have risked 1% for this position. I personally risked 0.5% of the capital, so for me it's like a 0.3% position. Okay, so still positive, still made some profits, but not much. My main bet, if I'm being honest, was for silver to continue going higher like this, creating new swing lows and steadily trending higher. So that was the game plan. That was the expectation. Unfortunately, that did not happen. And yeah, that's about it for this silver position. I'm still in pound Aussie, which is close to the stop loss, unfortunately. So possibly I will get taken out on this position. We will see. Let me just see something. Okay. Yeah, pretty close to the stop loss. We actually had some positive UK news, if I'm not mistaken. No, not really. But what you have to know is Aussie as a currency is pretty much a risk-on currency. What does that mean? Well, if the risk-on markets are doing well, if the Nasdaq and the S&P are going higher, that means Aussie should appreciate as well, because it's a risk-on currency. And especially if gold and silver are going higher, the Aussie should be going higher as well. I talk about it pretty often. 30% of Australia's GDP comes from metals and mining, so they are highly dependent on the pricing of gold, silver, copper, and platinum, all of those other metals used in the industry. So it's kind of a double-edged sword. Both risk-on assets are selling off or have sold off, and silver and gold are down on the day as well, which is hurting my pound Aussie short. And it's actually making pound Aussie gain some value. So we will see what will happen. Fundamentally, this is a good position. The UK is getting poor data. Australia is getting bullish data. And both short-term and long-term technical analysis is bearish. We are below the 20 MA, so we are respecting, or actually now we're above it. But when I took the position, we were below the 20 MA. I mean, this is clearly in a downtrend. If you look at this price, it's clearly trending down. So I still think this is a good position. Still think it is a high probability position, and I'm leaving all of the levels in as they are printing. Another position I have is USD CAD. So USD CAD is actually doing pretty healthy. This position is positive swaps, which is always nice. Dollar strength is working out here. The CAD, in my opinion, is fundamentally the weakest currency right now. It's getting the worst data. Did we also see some CAD data? Yes, we saw some CAD data. Inflation was pretty much as forecasted, so nothing super important. Manufacturing PMI, services PMIs are coming in 1 minute and 30 seconds, so we will keep our eyes out on this. But yeah, my USD CAD position seems to be loving this environment, seems to be trending with the DXY, seems to be following DXY. I don't have a specific take profit, so I don't have a take profit set, but the game plan is to trail my position. I don't mind holding this position for the next 2 to 3 months, if I'm being honest, because I'm getting paid positive swaps. And as long as Canada remains a fundamentally weak economy, and as long as we keep respecting, okay, let's delete that. As long as we keep respecting this trend line, I would say this position is pretty good to just hold. I think what can happen is we can do this and just steadily trend higher inside of this channel. It's not like we have any massive resistance level, so we can approach, let's say 1.44, 1.445. I think we can definitely hit those levels, and that would be a pretty significant reward to risk. So actually my favorite position in Forex right now is USD CAD. Okay, just a couple more seconds and we will see the reaction. If we go to the DXY, we should be able to see at least a bit of a reaction here. So, okay, it's gonna take some time for the numbers to print. Looks like it's pretty much the same as forecasted, right on the dot. Services PMI is a bit better than the forecast. Reaction, pretty much nothing on the DXY, but at least it's not bearish. So at least the numbers are not pretty bad, and they seem to be right in line with the previous numbers. Yeah, it's a nothing burger essentially. Let's go back to the daily chart. I do want to mention this, or I want to use this opportunity to mention the sponsor of today's video, since we're kind of at the half of my segment. The sponsor is, of course, DNA Funded. So if you're looking to get funded and increase your trading capital, you can check out DNA Funded, and you can actually get 25% off with the code A1Live. So A1 Live gets you 25% off any challenge. And this is specifically for you guys watching the streams. DNA Funded is a good, reliable prop firm ran by professionals, which I would say is a very, very important part, because a lot of prop firms are ran by 18-year-olds in their basement. So you don't want to go with those firms. But DNA is a reliable player, and you get a very, very competitive price. I believe it's cheaper than FTMO, cheaper than the 5%ers with our discount code, which is A1Live. This is my personal 50K challenge. If you have been watching my live streams, you know about this. Essentially, I take trade signals from ChatGPT every single day, and we're actually back up to the equity highs. I talked about this challenge on Wednesday and on Thursday, of course, and we were down to break even. I was even below break even, and now a couple of positions, I'm back up to the equity highs and plus 5.18%, which is nice. So approaching the phase one target. pretty interesting is that ChatGPT took a sell setup on the S&P, which I can show you. So it's not just buying or selling, or it's not just buying the S&P, it's actually buying and selling the S&P. I usually print out all of the setups on my trading view. So if this is just going to open, let's see, why is it so slow? I'm not sure why I'm getting these technical difficulties, but once it loads, I'll be able to show you the trades that ChatGPT has taken. Let me check out the comments. What do you guys think or say? Let's see. News in 10 minutes. Yes, so we checked out the news. AFX Bashi was up. Sluggy, hey. Rube, hello. Robohola, welcome. NDX, a buy. I wouldn't buy right now, if I'm being honest. Caught the rip on UJ. Let's see if interventions could push it. UJ. Okay, let's see UJ. Haven't checked out UJ. Okay, this would have been a nice buy setup. Pretty nice buy setup if I did get in, which I unfortunately did not. Trading view, what the hell? What am I paying trading view for? So slow. This is it. So this is what I want to show you. So these are all of the signals from ChatGPT, and it's mostly buying the S&P, but sometimes it sells the S&P and the decision turns out to be a pretty good one. Look at this sell setup, latest sell setup plus 2.2R. So pretty cool, I would say, pretty cool. And now the latest trade is a buy on the S&P. That's what I wanted to show you. UJ does look pretty interesting. This is now a pretty crucial level, tricky level as well. Look what happened the last time we were close to this level. We had a massive meltdown, massive sell-off. What was that? If you're asking, well, that was an intervention from the Bank of Japan. And if we go to, there was actually a website that will show you all of the interventions. So BOJ interventions, levels, dates, and size. Let's see. No, I have it saved in my email, but basically there's a chart that shows you every single time that the BOJ made an intervention. I'll bring it up. So give me 1 second and I'll bring it up. It's in my email, so it should be able to bring it up. Let's see. No, sorry, I can't find it. Yeah, I can't find it right now, but I'll probably try to have it prepared for the next time because it's pretty cool to see. Moving on. Yeah, this level, be careful. If you're buying USD yen, these are the levels where the Bank of Japan could get vocal and they could start coming in and heavily buying the yen or selling the dollar, pushing the exchange rate lower. You don't want to get caught up in this price action. If you can take some sell setups inside of this, then that is great. I know I had the best month in 2024 in July because I managed to jump in on this downtrend. So that was pretty nice. But you don't want to be long in this sort of an environment. Just a heads up. What about October jobs numbers? I don't think September numbers alone are good. I'm not sure. We still haven't gotten the announcement of when we will get the October numbers. I'm not even sure that we are going to get the October numbers. We will get the November NFP, and that should print on I think it's like the 15th or 16th of December. I'm not sure, but from what I've heard from Nick, it's going to be after the Fed meeting. So the Fed meeting is on the 10th of December, but the NFP should print after the Fed meeting. And that is why there is such an uncertainty for the rate cuts, because the Fed is essentially flying blind without the most recent jobs data. Hi, Marco. I think the news is pretty bad for Euro. It's helping DXY to go up. If you can tell me which sort of news you are referring to, what indicator do you use? I have the GT recent high low and the moving average exponential. These are the two indicators that I use. They just paint some highs and lows, and of course the EMA shows me clearly when there is a trend up or a trend down. It's not mandatory for me to use them, but they're just a visual aid to help me. Euro news, that is. Okay, I haven't seen the Euro news that you're referring to. If you can put it in the chat. I have arrived. Are you well into your segment, Marco? Hey, Joshua, I've started 20 minutes ago, so we still have 10 more minutes to go. Pound Aussie negatively correlated to US indices. Yes, I would agree. I would agree because the Aussie is very much a risk-on currency, and Pound Aussie is inversely correlated with the Nasdaq. Could be, or with the S&P, right? So sell off on the S&P, Pound Aussie gains value. That's just the correlation. That is how it goes. What's up, chat? What is up, Josh? I'm holding USD CAD. I'm holding it as well. Should I hold over the weekend? Well, that is, of course, for you to decide. That is for your own trade plan to decide. Me personally, I'm holding this position through the weekend, and I've been in this position for quite a long time now. So from the 28th of October. So yeah, I've been in this position for quite a while. I'm not getting positive swaps. It's -5 USD. Well, that is pretty bad because you should definitely be getting positive swaps on USD CAD. I know on my IC Markets broker, I'm definitely receiving positive swaps every week. Of course, if you check out the Edge Finder, carry trade scanner, USD CAD, you will notice carry direction is a buy. The interest rate divergence is positive, so this is positive swaps. By the way, if you want to get the Edge Finder, I use it daily. I pretty much heavily rely on the Edge Finder to take trades in the markets. Most of my trades have a bullish confluence or a bearish confluence right out of the Edge Finder. If you want to get access, you can use my code, which is Marco. And this month we're doing a massive sale. I think it's 45% off because of Black Friday. So that the code works for both the Edge Finder and the A1 Trading Discord. If you want to get these trade signals, like the one here on USD CAD running nicely, or the one on silver that I closed for an okay profit, nothing fancy, but a small profit, and this Pound Aussie setup, which is unfortunately in some drawdown. If you want to get these signals, definitely join the Discord. Gold, okay. Does DNA Funded have a Black Friday deal? I don't think you're gonna get a bigger discount than A1 Live. I think that's kind of the biggest discount you can get for DNA Funded, 25% off. So I don't think that they will have a bigger discount on Black Friday. But of course, do keep monitoring their socials. Maybe they will have a bigger discount, but I don't think so. News came positive. Can you share your prompts? You have all of the prompts for the ChatGPT challenge on my YouTube channel. So if you type in Marco's trading journey and you type in ChatGPT on YouTube, you're going to find 2 videos. And I go into a lot of detail of how I work with ChatGPT or which prompts I use to get these trading signals. As a swing trader, do you recommend to trade USD yen, or should we stay away until the 160 level because the Japan 10-year yield jumping insanely, concerning, but anytime central bank can intervene? Well, I would say it's pretty dangerous to buy it right now, because 160 level is pretty close. And that is the level where the Bank of Japan could get pretty vocal about the exchange rate. And they can even start jumping in and manipulating the exchange rate, right? So as a swing trader, I'm being patient on USD yen. Not my favorite pair right now. I prefer the USD CAD or possibly AU. No, not so much AU, but GBPUSD. Selling GBPUSD, that could be an interesting position as well. So USD JPY, I'm not touching right now. Which EMA do you use, Marco? I use the 50 and the 200. I use the 20. And I sometimes look at the 200 EMA, especially for the NASDAQ. The rule is, if we're above the 200, we're in an uptrend. If we're below the 200 EMA, we are considered to be in a downtrend. Are you able to use ChatGPT to analyze real-time graphics, technical analysis? I have tried it, but I haven't had any success. It's pretty bad. So ChatGPT's ability to spot technical analysis patterns is not so powerful as you would think. What is the name of your YouTube channel? The name of my YouTube channel is Marcos Trading Journey. Okay, that's it. This is the channel. Since there's a nice correlation with thoughts on Tesla, I'm not sure what 6A1 is. Thoughts on Tesla. I haven't seen Tesla in a while. Let's see Tesla. That's interesting. Well, I think we could get a bit more of a pullback on the Nas. So I'm not sure about Tesla. It looks bullish overall. We're respecting the trend line. So that's good. That seems healthy, the trend line. Long term, I'm definitely bullish. I like Tesla. I like Elon Musk. I think he's an extremely successful businessman. And I think the fundamentals with Tesla are bullish. Again, it's a meme stock, so it trades in a very volatile fashion. It's like Bitcoin, but overall, in the long term, I believe Tesla should appreciate because I think they will have even more innovations. They will have even more products. And I think this thing is just going to keep going higher and higher. DNA has a 3% risk limit. You can risk as much as you want, but they will manually check it after passing your account and probably just warn you before going funded and then going funded. Yeah, if you get onto the live phase and you risk 3%, I don't think that's going to work. I think they will send you an email that you need to lower your risk on the live stage. For the challenge phase, you can risk as much as you want, but for the live stage, you should keep the risk at around 1%, if I'm not mistaken. There has been very good data from Australia. So what's your take on Aussie dollar? Flat. I think for the Aussie dollar, the Aussie is strong. The dollar is strong. So I don't see a massive trend happening since both currencies are bullish. Of course, in the Forex world, you want to find one currency that is very strong and one currency that is very weak. In my opinion, the pound is very weak. The Aussie is pretty strong. So I'm selling GBP Aussie. USD is pretty strong. The CAD is very weak. So I'm buying USD CAD because that's how you get trends. If you buy a currency pair where both of them are strong, there's no trend. Or if you sell a currency pair where both currencies are weak, you're not going to get a trend. You want a trend like this uptrend or like this downtrend on the pound Aussie. Amazon, thank you for subscribing. Futures. Okay, futures. Let's see. Futures. 6A1 exclamation. Well, I don't know much about this. Okay, so it's Aussie dollar futures. Yeah, I'm not sure about the correlation here. This is not something that I have researched. but it looks pretty similar to the Aussie dollar exchange rate. It looks flat, if I'm being honest. So it looks a bit flat overall. That's why I'm saying I don't have a massive edge. Let me just see, what was your comment? There's a nice correlation with futures. You're looking for buy setups on Aussie dollar. Okay, I get it. For me personally, I don't have a clear fundamental edge because both currencies are strong. So I'm not looking for anything. You could maybe play the bottom of the range. So buying the support, aiming for the highs. That could be a play. There could be a trading edge in there, but for me, that's not going to work. I much prefer to have an extremely weak currency against an extremely strong currency relative to each other. So the dollar is not getting rock star numbers. The dollar is not producing crazy good numbers, but compared to some other currencies, it's definitely looking very healthy. The last thing I'm going to cover for today is going to be gold. So gold and silver. I'm bullish, but I'm not going to be a buyer here. I tried to take a stab at silver. I got smashed pretty much. So got taken out on silver. And now I'm being a bit more patient. See, right there. So wait, where is the trade? Yeah, this is the trade. We have recovered from that point. So it looks like I just got taken out and then the price recovered. That's interesting to see. So I would say, what do we expect in 2026? What do we expect with this US government reopening? We expect massive spending. We expect inflation going higher. We're going to get rate cuts. Sooner or later, rate cuts are coming. We might not get a rate cut in December, but in 26, we will for sure get a couple of rate cuts. That is the dot plot. Those are the future projections from the Fed. Rate cuts should be bullish for the metals market. Trump's big beautiful bill coming in 2026, lots of printing, lots of spending. So I think this thing goes up. I think there's a massive uptrend on the daily chart. Technical analysis looks very bullish. So I'm bullish, but I would wait a bit more to be a buyer. So I tried to take a stab at it on silver. It didn't work out. So now I'm being more patient. If we go up a bit more, I'll consider maybe getting in on another position. Or if we pull back, I'll consider getting in at some lower levels. Right now, though, being patient. My bias is bullish. So that is kind of the conclusion. That wraps things up. So thank you guys very much for watching. Thank you very much for the comments. You can find me next week. I'm going to be streaming pretty much every single day, most likely. Next week, as far as the data goes, let's see. Well, we have some stuff. We have the New Zealand cash rate. We have some dollar stuff as well, but we don't have NFP, of course. So we have some tentative stuff. We're gonna take a look. The most important event. The next most important event is going to be on the 10th of December, the Fed meeting. So this week, I talked to you about the NFP. We made a summary of the NFP. The next event to watch out for will be the Fed meeting. I'm overall bullish on the dollar. I think the dollar continues higher. I think the Fed stays a bit hawkish. That's about it from me. Thank you for watching, and good luck in the markets.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.